Welcome to the next topic in our Y series segment. This is the part 2 of the accounting equation discussion. Hi, I'm Saujanya and I coach corporate executives and business owners to understand finance in the most practical way. In the part 2 series of the accounting equation, we are discussing why is accounting equation a popular concept to understand. Can we link this equation to financial statements? This is a response to the kind of feedback we got from business unit heads and controllers that their team members do not understand why they do what they do. So it's a small initiative from us. I hope the corporate executives who work in the finance domain are benefited with the discussion of such topics. Coming to today's content. We are linking the accounting equation and the balance sheet. Is this possible? Can we do this? Is what we're going to be understanding. The accounting equation, as we have explained in our previous part 1 of the accounting equation, is nothing but assets is equal to liabilities plus equity. Assets are the resources held by the business in the form of tangible assets. It can be buildings, computers, vehicles, or intangible assets in the form of some licenses or some patents. Next is the liabilities. Liabilities are the sources of funds. Asset was the application of funds. Liabilities are representing the obligations of the business payable to an external person who has provided funds. Largely can be banks and financial institutions. So liabilities are external sources of funds. Coming to the next part of the equation, which is assets is equal to liabilities plus equity. Equity consists of the capital invested by the owner of the business and the earnings which are retained by the business after distribution of dividends, which is a compensation to the owner for investing money into the business. Do we have a further breakdown of the equation? Yes, at this level we do. What would that be? Capital is the money which is invested by the owner or the promoter who starts the business. But what about retained earnings? As the name suggests, it's retained earnings. Earnings are something which is an excess of revenue over the expenses. This is also called as profits, which is represented by a statement called as profit and loss account or the income statement. Such revenue minus expenses, which are profits, are available for distribution in the form of keeping it aside as a part of any specific reserve, initiative, or distributing to providers of funds, largely to the owners, which would be dividends. So revenue minus expenses less the dividends would help us to understand what is retained, that portion of the earning which the business would want to keep it with themselves. This is actually called as retained earnings. The retained earnings is presented along with the capital. Together with the capital, it's called as shareholder equity or just the word equity, or also called as net worth. This gives us a snapshot of the financial position of the business because revenue minus expenses is nothing but the profit and loss account and income statement as it is called, minus dividend is the appropriation statements. So profit and loss account and the appropriations are factored in the form of retained earning and presented along with the capital on the liability side. What is remaining is the financial position. Can we look into the balance sheet, which is popularly taught in a horizontal format in academics? I hope this particular effort of ours is useful to all of those commerce students who always understood balance sheet in this mode, where liabilities are written on the left hand side in a statement and assets are written on the right hand side. Liabilities will have shareholders equity and the outside liability, and the assets are written on the right hand side of the balance sheet. Both the final total of the liabilities and the assets will always be in balance. This is the left and the right approach, also called as the horizontal approach. We have our next video series where we're going to be discussing the horizontal approach and linking it to the vertical approach, which is a format given by the Companies Act. Vertical is nothing but stating from top to down. I hope this linkage of the accounting equation to the balance sheet was useful. if you have found it useful, please start understanding more about the accounting equation, because this is the most smartest way to understand the implication of any transaction on the financials or on the position of in any business. This is also a very popular concept among students who have not taken commerce as a choice in the academics, and the student who has taken science as a stream of choice in academics will enjoy this equation, because it has got left hand side, which is assets, is equal to right hand side, liabilities plus equity. This is the more logical, and this is the most smartest and the easiest way to understand accounts. This assets is equal to liabilities plus equity is always at balance after every transaction, and this also captures the dual implication of the accounting. I hope you've liked this video. If you've liked it, please do share and comment about your thoughts on understanding accounting equation. Let's take a recap before we wind up. In the recap, we can understand today's topic. Why is accounting equation a popular concept to understand? Can we link accounting equation to financial statements? Of course, accounting equation is nothing but a balance sheet. Accounting equation is a presentation of the application of funds of assets is equal to sources of funds of liability plus equity. Equity is further taken up into further components, subcomponents, as capital plus retained earnings. Retained earnings are nothing but excess of revenue over expenses, called as profits, represented in the profit loss account, minus the appropriations. Classic examples can be dividends or any appropriations to specific reserves. What is remaining after these appropriations is called as earnings retained by the business, retained earnings. Such retained earnings are added to the capital. Together of capital and retained earnings are known as shareholder equity. Another word for shareholder equity is net worth, or just the word equity. This is a snapshot of the position of the business in terms of assets and liabilities, as well as the performance in the form of profit and loss account, which is also represented on the horizontal format, where liabilities and assets are written one beside the other. Liabilities and assets final total will always tally. I hope you've liked the linking of accounting equation to the balance sheet, and you are more comfortable to understand the accounting equation. If you've liked it, please do let us know in the comment section, and do share these videos with all of your friends who have taken science as a concept or as a stream in their academics. See you in my next video series. We're going to be discussing horizontal format of the financial statements and the vertical format of horizontal statements.